And in today's conversation, we're going to be discussing the rapid changes in the retail robotics ecosystem and the impact that this is going to have on robotics startups in retail, logistics, and e-commerce. And not only has e-commerce been booming, but of course the COVID pandemic has made changes across the board. And how is that having an impact in the world of retail and as that affects robotics startups? Our experts in this area include David Pakman from Venrock, who's invested in robotics companies like Simbi Robotics and Misty Robotics, Deborah Weinsweek, founder of Coresight Research and renowned as the world's top analyst in retail, and Stephen K. Platt, who's the founder of the Platt Retail Institute and the Retail Analytics Council Retail Robotics Lab at Northwestern University. And I'm Andra Keay. I'm the Managing Director of Silicon Valley Robotics, and we're the Robotics Industry Association started by the robotics industry to support innovation and commercialization of robotics technologies. I think we're really at the center, the epicenter of what is sometimes called a Cambrian explosion in robotics. And it's certainly a fascinating place to be at. We have a lot of members in Silicon Valley Robotics who are early stage startups or startups who are pivoting in their different directions as they attempt to grow larger. And they're looking at the logistics industry. They're looking at the retail industry. They're looking at the changes that e-commerce make. And that's the discussion that we're all looking forward to today. So without further ado, final housekeeping. Speakers, please feel free to answer questions in the chat at any time or to ask questions of each other at any time. And my associate Fernanda will be looking for questions in the chat and making sure that she forwards them over to us as well. Thanks, Fernanda. And if you're not a speaker, can you please stay with your microphone and video off? We'll get your questions in the chat, and this will be recorded and available sometime later on Silicon Valley Robotics YouTube and website. Now, I'd like to introduce our first speaker, a little bit of a longer introduction. David Pakman is a partner at Venrock, where he focuses on early stage venture investing in consumer enterprise tech companies with a recent focus on robotics, crypto, consumer products, and AI. His active investments include Distillery, Smartling, Misty Robotics, Simbi Robotics, Amino Apps, and Dapper Labs. He led both the Series A and Series B rounds in Dollar Shave Club and sat on the board until the company was acquired by Unilever for $1 billion in July of 2016. And previously, David was the CEO of eMusic, the world's leading digital retailer of independent music, second only to iTunes in the number of downloads sold, and was also the co-creator of Apple's Music Group and a product manager at Apple. And David's a graduate of and former member of the Board of Overseers at the University of Pennsylvania School of Engineering and Applied Science with a degree in computer science engineering, and is also an avid musician and songwriter, which is interesting information I didn't know before. It's a pleasure to have you here today, David, and over to you.
Thanks, Andra. It's really nice to be here. It's my first time being a part of your group, and I'm honored to do so. Thanks for having me. I'll just talk maybe a little bit about our investment thesis in robotics. We're a reasonably typical Series A venture firm based in Palo Alto and New York, and with an office in Boston also. And we focus on early stage tech investing, pretty broadly defined. That includes software and hardware companies, computer products and computer services, consumer products and consumer services, some fintech. And recently, I'd say the last 5 or 6 years, I focused on consumer products and also hardware and automation. These are challenging sectors in which to invest. They have generally higher capital needs than software-only companies. And for that, there's a smaller number of funding sources available. People are often scared of investing in physical product companies. And one of the truths about robotics companies is they're really hard to make work. Robots are hard. And really making a working robot, while that may seem like the hardest part, is really, in my mind, the easier part than making a working robot that people want to buy. It is a challenging path to try to find product market fit. So with some scars on my back and some learnings from spending time with many of the world's best roboticists and successful robotic and automation entrepreneurs, I have a few thoughts to share about what we look for. Maybe I'll just start by saying, I know we're going to focus on retail robotics today, and I'm glad we will, but there is some really great macro trends that are pushing the need for automation into business, into enterprises, one sector of which is retail. And I won't take you through slides because I think the other panelists will, but I'll just tell you that a bunch of macros that have been driving robot adoption are, one, we have ever rising labor costs, at least especially in this country. And even in sort of bull markets and bear markets, I think you'll see that there's some pretty strong macro factors that are pushing automation adoption. We have rising labor costs. So in the bull markets, we have full employment challenges when there's labor dependent growth. You saw that recently right up until COVID struck. Just think about the challenge that Amazon and FedEx and other logistics companies have had trying to hire workers into their fulfillment centers. I recently spoke with a good friend of mine who I met at Apple, who's now top 3 at Amazon. And if you have watched your delivery times on Amazon, depending on where you live, it's still pretty challenged. In this part of I'm in sort of Connecticut, New York area, it's about a minimum 10-day delivery time for just about any item and longer for many others. And that is purely because they've been unable to hire enough humans. And this is one of the most automated logistics companies for processing orders, swamped with demand. Almost all sort of distribution center and fulfillment center operations are located in very similar geographic areas because they're always have good proxy locations to the transportation network. And as a result, these areas have labor shortages even in bear markets. There's competitive pressure as another reason why a lot of different businesses need to invest in automation, obviously driven by Amazon in retail and logistics. And even in bear markets, which we're probably in right now, there's cost reduction priorities and further competitive pressure. Whoever can fulfill orders or take care of services at lowest price can win. The coronavirus pandemic has also, I think, bred some more acute needs for robotics and automation in elder care and healthcare, new pressures on delivery business, need to lower people density in certain work settings. So we like a lot of the macro pressures, if you will, that are driving automation adoption. And that's happening in sort of really 5 main sectors. While the gross margin has stayed the same and but while the gross margin has roughly stayed the same, industrial robotic costs to build robots has fallen, made possible by a really great learning rate. So we continue to see, because of falling price of robots, it's an elastic market and demand increases. So we look at manufacturing automation as one main consumer of industrial robots, warehouse and logistics, retail, agriculture, and then maybe sort of consumer purpose-built. Sticking just to retail, the market forecasts that we've seen are that we're at about a $12 or $13 billion market for retail automation, but that will double to about $24 billion by 2026. And that's largely driven by hypermarket or supermarket growth. So we have made an investment in a retail automation, retail robotics company called Simbi Robotics, many of you know about. And what we heard loud and clear from, they sell largely to grocery and drugstore retailers. What we heard loud and clear from many of those store operators was that there are plenty of tasks that are essential in retail that humans, one, are not very good at, and two, they'd rather not pay people to do. For instance, checking store shelves to see what is on the shelf and what's not. Humans get very bored by this job. It's painfully monotonous, and store owners would much rather have humans talk to the guests or the store shoppers and help them out than walk around with an iPad or a clipboard and try to see what's missing from shelves. So the Simbi robot is a robot that drives up and down store aisles and finds what's missing, what's misplaced, and what's mispriced. And collectively, this is about, believe it or not, $500 billion economic opportunity. That's how much is lost in sales because stuff's not on shelves. The final point I'll make about retail and the need for automation is that COVID accelerated online ordering for sure, but especially delivery, because none of us wanted to go to stores for a while, and a bunch of us weren't allowed in stores for a while. So this acceleration of delivery has actually put a lot of pressure on retailers to try to convert themselves into delivery companies. Many of them are not. Most of the grocers are not built to be delivery. If you had to construct a warehouse for where you would, for where the items would be that you would pick and pack and put into bags to take to someone's house, you certainly wouldn't design a grocery store. Like that's one of the least efficient ways to have humans walk up and down aisles. But that's what we have. We have a bunch of grocery stores, a lot of stuff on the shelves. And so knowing what's on the shelf and what's not has turned into a crucial piece of information for a grocer so that they won't sell you something on the app that you expect to be delivered to your house that doesn't arrive because they never had it on the store shelf to begin with. So there's a question, yes, Simbi, SMBIE, is a company that's automated the determining of the information of what's on shelf. So I would just say that as a VC, our job is to find companies that are solving a big problem, but are doing so with some evidence that consumers are buying or customers are buying. And I think retail is a sector that's been super challenged. And so is one not to tread lightly into as a developer of automation, but there are bright spots of people that have succeeded.
That's fascinating. Thank you very much, David. The information is really, it sounds as though retail is one of the areas where we're actually seeing innovation in almost every aspect as well. If we were to look back, say 5 years ago when Simbi was getting started, when there were really just a handful of companies that were talking about retail as the market, it was a very simple picture. There was one, maybe two applications, or there were robots that were trying to do a number of different things, searching for the right product market fit. And retail seemed to be a comparatively blanket kind of category. What we're seeing right now, and perhaps this is simply because we're learning a lot more from the robotics perspective, we're learning a lot more about the nuances, but it seems to me now that retail is coming in such a variety of shapes and sizes, and there is so much innovation happening, not just in the technology suite, but in the ways in which retailers are looking to find advantages. Has this become a sector that is more innovative now than it was, say, 5 or 10 years ago as a result of market pressures or other pressures? Or is this really a case where the technology has only just reached a useful point?
I'd love to hear other people's answer to this question too, but my view is one of the reasons why it's very hard to sell into retail. I'm going to paint with a very broad brush here, and I'm sure there are lots of examples that are counter to this point, but in general, it is a segment where the participants, retailers, don't wake up every morning and say, what problem can I solve with technology today? Whereas in tech companies, we wake up every morning and say, what problem can I solve with technology today? Which is why tech companies are huge consumers of tech. So it's the default mode of solving problems in a lot of legacy businesses in general, but retail in particular, is with humans. So if you're a company that manufactures an automation solution, you first have to overcome sort of the cognitive bias that problems get solved with humans, and rather than, say automation is always the right way to, or automation is always the right way to solve a problem. Now, that doesn't mean there aren't innovative retailers. There's awesome innovation in retail. A lot of it's being pushed though by tech people moving into retail. Like I think the biggest automation, the biggest innovation around retail, I think, was kicked in the last 5 years, was kicked off by Apple opening their stores and having a completely different sort of shopping and checkout experience. And a lot of people woke up and said, I want to do that. So I do think that retail is becoming more friendly to the adoption of technology, more modern technology. But I wouldn't look at it as a sector that's well over the hump in that. There's still a very tentativeness to the purchasing cycles.
Andra, I'll jump in, and I agree with everything that David said. What we've seen is that there is this, kind of desire to, when retailers are investing in technology, robotics, or, kind of otherwise, they want to be able to see it. And so that's where we have seen definitely a very early interest in robotics. And you think about, kind of Kroger investing in, kind of autonomous vehicles and, kind of Bossa Nova and some other things I'll talk about. But and David, right, once again, my background is, kind of as an analyst covering the retail space. I feel like they've been, versus other investments, they've been very early in robotics, and they've been willing to spend quite a bit when you think about CapEx or kind of a SaaS environment. So that, I think, is, and they've really spent a lot of time trying to understand the sector, right? Whether it's in store, whether it's back of store, whether it's, kind of supply chain, or, kind of their warehouses, what aspect, and we've even had interest in like robotic greeters, and I feel like they've been much more open to this sector because they can see it, right? Versus AI, which, none of us can see really, except in the physical form. So I don't know. I mean, Stephen, what do you think?
Well, 1 second. This is where the technology gets a touch.
Oh, I'm unmuted. Thank you. It's interesting, going back 10 or 15 years, retailers have always historically underinvested in technology, and that's been a problem. I think with this COVID thing, it's pushed a lot of folks that were extremely hesitant to think about automation and AI to recognize now it's not really a choice, right? And if you look at how advanced, particularly Walmart has been, they've probably got 6 or 7 fairly advanced robotics types deployed in thousands of their stores now, and we outline all of those in a report I can share with people. There's a lot of interest right now. There's a lot of interest in it, and it's going to accelerate. Part of the other problem, and David kind of touched on this, most retailers, not all of them, but certainly supermarkets, have extremely low operating margins. So they're very penny wise and pound foolish, and most of them still approach investments into technologies on trying to attach an ROI and don't think about things like throughput and efficiencies and deploying workers to other more efficient tasks and functions. And it's been hard for them to get their arms around that. But I think COVID has really pushed a lot of folks over the top.
We'll dive in and we'll talk a little bit more about that. Thank you for those. In fact, this was a perfect segue. I was about to say, let me introduce Deborah Weinsweek from Coresight, who's the founder of Coresight Research, because Deborah spent her career analyzing the intersection of retail and technology in order to build a mosaic for the future of global retail, which has led to her current role as CEO and founder of Coresight Research. She analyzes disruptions altering the new retail ecosystem, impacted by technology, real estate, supply chain, and fashion, industries she's studied for many years as an award-winning analyst on Wall Street, as well as the member of several boards of global companies and advisor to startups and accelerators. And I met Deborah as she was traveling the world to speak globally to advise on what is the transformation that's happening in the retail industry? How do we understand that? And how can we participate in that? And there's a lot of other great information on Coresight Research if you're looking to look up more about Deborah, and I totally encourage doing that. Over to you, Deborah.
Thank you so much, Andra, for this opportunity to speak, and really honored to share the stage with both David and Stephen. One area here, and I do have, of course, slides. I think that what's critical here is to think about the different aspects of who is investing, and whether you're, looking at somebody like a David from a VC front, the retailers, and then, of course, my background is Wall Street. I ran the consumer team at Citigroup for many years. And I'll say, right, when we were, increasingly informed about the positive impact around robotics in retail, and we would talk to the management teams, it really accelerated their learning and their interest in the topic. So I would urge everyone to really ask executives, because I do think that there is, a significant push. For those of you who know me and who know Coresight, our heritage is in China. I typically spend about half of my time there. We spun out of a Chinese conglomerate. And, much of the, kind of work that we've done around robotics has been, kind of learning, whether it's, through the Hacks Accelerator or others, and applying much of that knowledge to the West. We've also spent a significant amount of time in Japan and have been in some really interesting robotic parks. So let's jump into it. So we're going to talk a little bit today about, what we've seen in retail. And I do think that, everyone remembers when Pepper first came out, and this was groundbreaking. And, the data that was presented, a lot of it from CPG companies, around the difference that Pepper made in their sales was quite significant. And I think it did cause retailers to take a pause and rethink their investments from a CapEx perspective. And what would the future of the store look like? Lowe's with the Lowe's bot, I think that's been pretty critical, because, this idea, you come into the store, you don't know what you're looking for. You show the, kind of Lowe's bot a screw or, a doorknob, and it can help you find it, and really makes it frictionless, which I think is incredibly critical to think about here in terms of what do robots do when it comes to retail. It also, as Andra alluded to, right, it frees, humans from mundane tasks. What we've seen for the most part, right, and we've got a picture here of Bossa Nova's shelf scanning robots, is that it then, what's been happening, right, is the robot allows the sales associate to redeploy their time to customer service. And we have seen that those retailers who've embraced this, their comps have been higher because their in-store service has been better. And, the whole thing I never understood, and I'm sure Stephen will talk a little bit about RFID, was the idea that, if it's not on the shelf, you can't sell it. But why isn't it on the shelf, right? Retailers know how much comes in the back. They know how much goes out the front. But, the store itself, right, that's a kind of living, breathing, kind of organism. And so that's where, robotics come in, because a lot of times, right, these, if you will, systems in the back of the house and in the front, they're not talking to each other. But the robot can take care of much of that. And we are seeing, I think Walmart, very much at the forefront here. Even more important is, right, if you can identify that there is an out of stock, and then you can have the robot, place that item on the shelf, we are talking about all kinds of efficiencies. And here, buy online, pick up in store, that was a conversation starter in 2019. And now it is a must-have in 2020 as a result of the changes in the environment. And many retailers have been rushing to find new technologies to assist them with that. I love this one with the Spot robot, and this idea of how do we keep humans safe in this environment. And this is just a great example in terms of thinking about social distancing. All of us know Badger, and many retailers have embraced working with Badger to really help keep the store environment safe. My history in grocery, right, the amount of, well, first of all, the amount of stores I've been in, but the amount of spills you see, right, kind of accidental, drop and destroy, some of these challenges that retailers face, the robots can keep us safe. And I think that is really something, and whether it's in a mall setting or if it's in an airport, right, there are many uses of, kind of this technology to keep all of us safe. So I'm going to, I have a small confession today. Back when I was the e-commerce analyst at Bear Stearns, we IPO'd a Webvan. And I remember I probably did that warehouse tour, I mean, it must have been at least 50 times. And I was so, first of all, I've always been really much a, kind of student of what's happening in supply chain and logistics, right? Because this idea, if we can, first of all, order the right quantity, if we can then distribute the right quantity at the right time, we end up going back to this word frictionless kind of supply chain system. And what we're seeing is Ocado and Kroger very much a collaboration and kind of a lifelong partnership in terms of thinking about this idea of automated warehouses. We're also seeing Locus Robotics kind of help with worker movement in warehouses, and there are many other technologies that I'm sure we all know on this call, but we are continuing to see efficiencies that are being driven in this way. I would say starting in kind of mid-19, when I had the opportunity to spend some time with the founder and CEO of Fabric, who moved from Israel to New York. I think I sat down with him on his first day in the city, and really this idea of kind of thinking about. I'm a real believer in the power of sustainability, and that it should be in every aspect of retail and everything that we do, because we can all work together to have an impact. If you think about this idea of these kind of micro fulfillment centers, we can get product that the consumer is willing to pay for or really needs, right? I need that cup of sugar in 30 minutes, but I can get the rice in 2 to 5 days, and we can start to think about really this kind of build out of micro fulfillment in a way that if you build it around a city, you optimize the kind of time to get product to consumers, and especially the products that they need. Takeoff has been, you talk about kind of retailtainment, they're in, kind of some back of stores such as Safeway, but it really gives, right, kind of retail is, this opportunity to kind of really see, right, how are the beans crushed, how are the cakes, kind of decorated, and how are products, kind of put together for shipment. This is what drives interest from consumers and also keeps them coming back. We, we've spent a lot of time with JD, and kind of heralding back to some of the challenges we've had in 2020. When Wuhan was under lockdown, JD has some robots who can carry up to 2,000 pounds, and they were able to deliver hospital equipment. They were also able to deliver food and other necessities to consumers who were in a very tight lockdown situation. And it is unbelievable how kind of this drone technology can have an impact and literally mean the difference between kind of life and death. What we're seeing here in the U.S. is Walgreens actually has a pilot right now with a drone company, and they are looking to deliver prescriptions in 8 minutes. And going back to kind of what Kroger did with Neuro, they have an investment in terms of thinking about autonomous vehicles. What we've seen, and this is a great example, with Kroger's entrance into China, their interest around kind of all things robotic and kind of all things frictionless really accelerated. I love coffee. I love coffee ice cream. I love everything coffee gum. And so if there's an easier way for me to get not only a cup of coffee, but a perfect cup of coffee, which we find in, kind of many places around the world. This is a great example in Singapore. I've seen it in Hong Kong. We see this in, San Francisco as well. But there's this idea that we can continue to kind of take out these monotonous tasks and really redeploy humans to great customer service and really helping people figure out kind of what they want and really develop lifelong customers. This is a great example from Fudan in Foshan. We've also seen examples where Alibaba in their Hema stores, where they have you place an order and the robot delivers your food to you while you sit there. So once again, it's retailtainment. So with that, I'll conclude. This was just kind of a brief overview of what we're seeing in the world of retail robotics. I do think that there is an opportunity for retailers to work together and partner. One of the things I wanted to mention is we often do see this idea of exclusivity and and this thought around, retailers, when they find a great robotics company, they kind of want it for themselves and for their stores. And so I do urge, especially right now where collaboration and partnership are so important, that retailers not only spend time together, but also this idea that they, kind of open innovation and open source. So with that, Andra, I'll turn it back to you, and thanks again for the opportunity.
Well, Thank you very much. That was fascinating. I've got a page full of notes, and lots of questions are coming up in the chat as well for all the panel. But before we get sidetracked, I should at least introduce our panelists, Stephen K. Platt from the Platt Retail Institute and the RAC Retail Robotics Lab. And Stephen is an adjunct professor and research director of the Retail Analytics Council and director of PRI.ai. And Stephen's got over 25 years of experience in the retail analytics space. He received his BS degree in finance and marketing, JD, and LLM in tax from Boston University. All good subjects. I'm glad you did that. But he's authored many studies about retail analytics and digital communication networks and has published many articles in journals around this. And I've certainly been reading the articles that Stephen's producing at the moment as part of the Retail Analytics Council. I think it's really essential reading for anybody that is serious about understanding the field. You know, in fact, all three of the speakers, I totally urge you to stay in touch with what they're thinking about this field. We've got a lot of questions, but first, Stephen, over to you. You've got a few more things to share with us too.
Oh, great. Well, thank you so much. And Andrea and David and Deb, thank you. Deb, thank you so much for that presentation. You did a nice job of kind of, I'm sorry, I'm trying to figure out how to do this now. There we go. Setting a framework for what I'd like to talk about in terms of some great examples. So thank you for that. I'm going to take a slightly different tack because I know nothing about startups like Dave and Deborah, who spend have a lot of expertise in that area. I'm going to talk a little bit about what we're doing at Northwestern because I think it's pretty unique, one, and two, our research focus will help inform the audience, I believe, as to where all this is heading. So with that, I can make my slide go forward. There we go. Many of you have probably seen it, and it was kind of interesting reflecting back on David's point about underinvestment by retailers. This chart was put together by McKinsey. And what it really, the only takeaway here of note is they looked at all the industries that could benefit from investments in AI. And as you can see on the upper right quadrant, retail is far and away the largest potential beneficiary of AI. And that kind of drives a lot of what we do. We're really about research, education, and innovation. We have our AI lab, which I'll mention briefly, and of course our Retail Robotics Initiative. We publish research, and Andrea was kind enough to highlight a few of our recent publications in the space, which I'll share with you all. We conduct experiments every quarter on campus with retailers. We're seeking to sort of commercialize some of our research. We're also starting a community outreach program with the university to get minorities and women more focused on careers in robots and AI. Okay. So as far as we know, we're the only university-affiliated research center focused on retail, AI, and robotics. We publish a lot of research. Every year we have our two-day Retail Robotics and AI conference. We'll talk about some of the stuff we're doing in bots in a sec. And we have a retail advisory board with probably around 55, 60 leading retailers in the country. Okay, there we go. A little bit about our lab real quick. I mentioned every quarter we work with a retailer that's either newer to AI or wants a quick POC sprint within our 10-week quarter system. So we've done things with Ulta Beauty, like store traffic prediction models to help align tasks as well as labor. We just completed a project with Tractor Supply where we looked at categorizing deal-prone, non-deal-prone customers, and which should and shouldn't receive offers based on predicted response rates. Oops. Sorry. In terms of our robotics initiative, which I'll talk about a little bit, we're sponsored by or assisted by and work with Cloud9's Simbi Badger. Deborah actually raised a point that I thought was really instrumental, which is a lot of activity is happening in China. Probably two of the three largest robotics firms, Cloud9's, they were funded with about $500 million from SoftBank, and UBTech, about a $750 million investment by JD. And of course, you have SoftBank out of Japan. So they really have been leading in many respects this whole surge into robotics. I wanted to just talk about our research focus a little bit because, as I said earlier, for folks that are in the space or thinking about getting into the space and you see the current landscape, it kind of will give you a little bit of a footprint about where we think the world is going. So we spent a lot of time thinking about moving computation off the payload and into the cloud and the edge to do things like reduce latency and cost. We also spent a lot of time thinking about how that kind of device data can be included in the retailer's overall data stack for richer information sources, for example, introduction into the supply chain. Bot-to-bot communication protocols is going to be a very big deal. We just concluded a roundtable with the former chief scientist at Walmart who was responsible for all their bots. I think he predicted by 2025, Walmart would have 15, 20 different robots running around their stores. Right now, they don't talk to each other. And as you think about how this evolved from a bot that picks to a bot that puts it in your car, all these different robots have to communicate. Creating synthetic training data, of course, is huge to increase speed to market. Another big shift that we're starting to see is robots that do a lot more than just one function. So we talked about the shelf audit robots, the hazard detection robots, what you're going to, and the floor scrubbers, for example, like Walmart has. Those floor scrubbers could be easily adopted to do RFID scans as they go up and down the aisle. That hazard detection robot can and will be at night doing UV disinfection of store environments, all of which drives the ROI of these things. Excuse me. There is absolutely no standards in this industry. We've been fortunate to work with Andra as well as the Association for Advancing Automation and trying to get industry and retailers together around things that are so simplistic like charging stations. Walmart has 5, 6 bots now, and they have 5 or 6 charging stations. I think a more future-focused need is on cloud control systems, command and control systems, to move robots from an automation mindset to contextual awareness. You know, the reality is you can't data train a robot for every instance because there's a lot of instances that have never occurred before. And so how do we make these robots talk to each other, talk to different sensors, cameras, and make them much more contextually aware and be able to respond, excuse me, even if they haven't been trained before. Finally, we're going to be standing up our first 5G test lab here pretty soon. And so we'll be looking to work with a lot of companies that want to do tests with us. I think the final thing I want to just hit on, because of course this is a retail robot conference, what are some of the things that we see that are accelerating the adoption here? I mentioned functional utility a minute ago. in terms of, oh, sorry, David actually did a nice job about talking about things like shelf audit and the use case. Excuse me, I have a cold. The use case for robotics, advances in AI, labor challenges and safety issues, new uses of data, more functionally efficient bots, sorry, changing consumer behavior, and again, establishing industry standards. Okay, I'm going to close with this because my voice is dying. We recently published these two reports. The emerging trends one is a summary of all the different deployments we're seeing and who's playing in the space and which retailers are adopting them. The other was a roundtable we just did with the head of innovation at Kroger and the former chief scientist at Walmart. If you have trouble sleeping, I would highly recommend that one. But if you're into robots, you'll learn a lot about what's going on. And either of these are available for free at the RAC website. So thank you.
Thank you so much, Stephen. That was, first off, if people can't find them directly, we also talk about those reports and we link to them on the Silicon Valley Robotics website, where we have a number of, we like to address the, we like to address all of the verticals in which robotics is growing rapidly. And in fact, David mentioned this at the start as well, in the areas that he's looking at, which include retail, includes agriculture, includes, I have to look back at that, but we have a construction robotics forum. We're about to schedule a mini symposium on food robotics, which is going to look at the three different areas: agriculture, food processing, and food service. And retail is, and logistics is, retail is a very interesting area because of the way in which it can kind of traverse a number of those things. There's potentially logistics at the heart, but there's also so much about, I guess, social robotics and about customer service that we can learn from the retail field for many other applications from health and other areas. But it is essential to understand those industries. And I don't think those reports that Stephen talked about send you to sleep. I thought they were fascinating and I totally recommend them. Now, there are so many great questions that I hope we're going to get through them all, but if not, I believe Deborah was saying that she's put her email address in as well. We will follow up with these questions, and I'm going to start probably at the most recently asked question and maybe work backwards. So if you put a question in right at the start, please don't be upset. We are going to get to it as well. But so the question from Sumakaya is, will micro-fulfillment centers get even smaller as fulfillment comes closer to the consumer post-COVID? And currently the smallest one is around about 5,000 square feet, 500 meters squared, which is, I think, fabric as well. And the assumption there is that this is still quite costly for retailers to procure and maintain in city centers or downtown areas. So do we have some feedback on what is the future of micro-fulfillment? Maybe Deborah.
Sure, I can jump in. What we're seeing right now is with the increase, unfortunately, in bankruptcies and the malls losing many tenants, we're even starting to see micro-fulfillment, you know, kind of in what are called dark stores now. And this idea that right there, there's still kind of, you know, a bit of excitement in the mall, and we can see, you know, kind of product being picked and packed, depending on whether it's, you know, kind of ambient or not. And I do think that we'll continue to see these smaller, you know, right now we really haven't kind of cracked that really short, you know, kind of under 1 hour delivery window. My anticipation, and I think the question is a great one, is that, right, I mean, the consumer, what we've seen globally, right, 30 minutes is kind of what they, really the sweet spot. And so if we can, kind of work towards that, we'll most likely need to move some of these micro fulfillment centers closer to the consumer. And, with a lot of available real estate at about 2,000 square feet, we are hearing from landlords that they have had asks for the, kind of property to have a micro fulfillment location. So I think we're in the very early days here, which is what's so exciting. And I think there's a lot more to come.
Fascinating. I've learned a lot just in terms of looking at that and the various sizes for this, which I know is such an important issue, the rental costs. We've got quite a few questions about costs, but a more general one, David, for you, a question about, at the moment, I would advise robot startups to pick one thing that they're going to do and do it extremely well as their pathway forward for funding. But what I'm hearing from Stephen, from Deborah, from retailers is the desire to have more multi-purpose platforms, which has been something that I know people tried initially, and it didn't seem to be the successful thing. The successful thing in retail seemed to be that one application, inventory, for example, or floor cleaning, and doing it really, really well. But now that the pressure is building for multi-purpose platforms, is that viable? Would you look for that from an investor perspective?
It's a business strategy question. Should you do a lot of things at the beginning or should you do one thing at the beginning? Most of the evidence of successful technology companies would suggest that you start with one particularly acute problem and solve it really, really well, better than anyone else does, and try to drive adoption that way. And once you've built a bunch of trusted customers, relationships with them, you can migrate to solve other problems, maybe the ones that are most adjacent to the one that you've already solved. But this is an opinion. There are different paths to success. I think it would be pretty hard to come in and say, we're a shelf scanning robot. We also have one that cleans up spills, and we have one that goes in the back and helps, decrate or depalletize your arrived goods and store them. It would be hard to make that sale because I think there are different competitors in each one of those categories, and any customer doing their job would want to evaluate each one of those competitors for each of the jobs. But I think Stephen's point's a good one, which is that if you take that path and as a customer and buy a whole bunch of disparate robots, they're not going to talk to each other for a very long time, if ever. We're not going to have a common set of APIs for robot to robot communication anytime soon. And so but that in and of itself might be a different startup opportunity. We've seen in the largely in the manufacturing space, 2 software companies that are trying to build hardware abstraction layers around the very common robotic arm companies. And therefore you're, as the customer, if you're, let's say, an automotive manufacturer, you could attach your warehouse or automation manufacturing system directly to this software company. And then they can sort of sit on top of your different vendors' pieces of hardware, which would then allow you to move to buy different robots without having to rewrite your entire integration. That hasn't been fully proven out. It's a theory a couple companies have. I think it sounds good. I think it's going to be really hard to make work, but I think that's a more likely path forward than there being like one robot company that solves 7 problems.
I've certainly seen a rise in the number of robotics companies that are looking at a software solution, some sort of abstraction layer, as you said, or dashboard. And I've been wondering how the traction has been going in that. But there's so many really good questions there. Stephen, did you want to say something about that topic as well?
Yeah. And David, I think you raised a good point. And he's an expert on investing in companies and going to market. I'm a research guy. I think the way I think about it is a payload's a payload, right? And in the early days of retail robotics, Bossa Nova, Symbi, every single one of these companies, they had to invent their own payload. They had to, get their LiDAR figured out, et cetera, et cetera. But the bottom line is the payload is a commodity. And so then the question becomes, what can you do with it, right? And I don't think I think about it as trying to be that Swiss Army knife. And again, I think Dave's point is a good one. But the point is, if you have a good payload, and particularly if you move to 5G rather, and get a lot of that compute off the bot and have, and can deal with latency issues, I think that the ability for that bot to do a bunch of different things, it becomes much more competitive. It's not an issue of our self audit bot is better than yours in the marketplace. It's an issue, in my opinion. Do you want Bossa Novas? You want Symbis? You want Badgers? There's no real performance difference. And like any kind of hardware, at the end of the day, it's what does your software do for me? How does it integrate into the cloud? How does it integrate into my systems? How can you help me with throughput? How can you help me with supply chain? So that I just sharing a academic perspective as opposed to somebody who invests his own money. And so I like David.
I was very struck by your feeling that there was actually no real difference between the robots compared to the software layer and what was happening there, because I'm sure roboticists are kind of quite focused on the differences. And I'm really pleased that there are so many roboticists with early stage companies in some, or with research and development labs on the call. So this is definitely a topic that's resonating. Just going right back to the start, a question from Old O'Reilly. In 2019, there was a contraction among retail robotics companies. And I think we're talking about at the service consumer facing end with Zoom, CafeX, Creator, and Chowbotics contracting. And what steps would the speakers suggest retail robotics companies take to hit the ground running as the economy reopens post-COVID? How can companies avoid the pitfalls that made retail-enabled robotics struggle in the past?
I think, so this is a complicated question because there really isn't a one single answer, but I'll tell you a few things that we look for. I think robotic companies have to be great stewards of capital. They have to figure out how to make meaningful progress on very little money spent. Now that can be really, really hard to do because hardware costs money, manufacturing costs money, but there's one path that has been tried many times is raise a lot of money and make very little progress on it. And that does not seem to be a recipe for success. And by progress, I mean not just solve some technical problems, demonstrate some early evidence of product market fit, that you're solving a problem that people will pay you for. In my opinion, the most likely successful robotics companies are really good at this. They become domain experts on a problem. They get to know customers very early. They maybe even co-develop or co-pilot or like try to solve a problem in the store, in the retail case, early on, and get evidence that, if I build this, will you pay me, and how much will you pay me? So that's sort of piece number one, I think. The second is that making sure that you understand what leads to people buying the solution. Like hearing that it's a problem and then solving that doesn't necessarily convert a customer. Like there are robots that can do a lot of stuff today. There's some questions here about manipulation. I would not at all declare manipulation a solved problem, but it's made incredible progress the last 4 or 5 years. There are lots of pickers that can pick up a lot of different objects pretty reliably and at rates that are superhuman. But just because you do that doesn't mean that you're going to sell thousands of robots into pick and pack locations. One other example, or one other point I'd make is Amazon over the last 20 years was growing and continues to grow so quickly that they've been building more and more warehouses and fulfillment centers and distribution centers, not converting old ones anytime they want to invest in automation, although they've done that too. But because they were always building new ones, they were constantly iterating. They still are. I think they have like version numbers of their fulfillment centers. Like this is version 7, this one's version 8, this one's version 9. So they were iterating, adopting new technology, building their own. So selling into that is a lot easier than someone who has their footprint, is growing 3 to 5% a year, and is not really adding any new warehouses or fulfillment centers. So the only way they could buy your robots is by literally replacing the current one or the current set of automation technologies there. And that's not the end of the road. You can sell into that, but that's a much harder environment to sell into. So just because, again, you solve the problem doesn't mean the customer is willing to buy.
That's very interesting, David. In fact, that segues into some of the questions that were asked earlier on, which relates to, can retailers afford robots? And I believe that question from Shinichi Manaka. And do we need to go OPEX, not CAPEX, or does that really depend on what retailer we're talking about? Deborah, Stephen, David, in fact, anybody who wants to dive in on that one. How do retailers want to purchase robots? Are they limited in their financing, or do we need to start?
Well, I think first of all, they want someone else to do it first, right? So that they try it out, and right, the market says, hey, that's a great idea. So I think number one, there is a fear factor in terms of being first and being wrong, especially if it's a CapEx and it's significant. Secondly, if they could, because as you know, kind of Stephen, which I think we were all surprised, right? It doesn't matter if it's A or B or C. So if you have the construct and you're just thinking about software, right? Because of all then it doesn't matter in terms. Maybe it ends up being a SaaS, right? You don't own the robot, you're renting it, and it's a completely different economic model that's probably much more palatable for retail in terms of how they think about expenses right now. And then third, I think that, you know, kind of as we look at the, you know, kind of playing field and where else they're investing right now, I think that, you know, there's a being cognizant of that, right? So hey, I've always, and David, I'm sure, I advise many startups, I'm sure, you know, as well, right? I'm like, throw AI at everything and you will like win, you know, kind of every startup pitch. And so, right, you know, but really helping retailers understand, right, kind of what's differentiating kind of, and what's important kind of along the way. And I also think this whole like robotics journey, right? Where can they just get started, right? Like what's a small investment so that they can kind of dip their toe into the water so it's not overwhelming. And I think that is, you know, kind of every step of the way. I don't know, Stephen, how, you know, when you're talking to these folks, because you're also talking to the ones who are making investment decisions.
Yeah. Hi, am I on?
Yes, you are.
Oh, thank you. I think there's a variety of different models being tossed out. Obviously, software robots as a service is of course one. We're starting to see people, you know, think about, which I don't think is going to be super successful, you know, if we could prove up that we help capture lost sales due to better stocking levels, you know, we get a piece of that. I don't think selling these things is going to really be a successful strategy. There's a lot of maintenance still required. There's upgrades. You know, who's going to monitor if the robot gets stuck? You know, if something breaks on it, who's going to pay for it? You know, it's just still an emerging technology that requires a good bit of hand-holding, in my opinion. And I think ultimately a SaaS model will make sense. But also within that, I mean, so you're going to see in the fall a lot of these UV disinfectant bots hitting the market. There's many companies, and if you think about one robot in 2-3 hours disinfecting an entire 50,000 square foot store, the cost of that versus, you know, sending in a team of people to clean that kind of store, right? The math is really favorable toward that bot. So I think one that there's a lot of good ROI and use cases out there, but I don't think selling them is really going to be the way that it ends up working, because the bots are going to just start evolving too quickly. A bot you bought 2 years ago, 2 years from now when there's no compute on the bot or whatever, it's going to go to the junkyard. And I think if anybody thinks about It's not like a refrigerator where the technology advances every 10 years. So I don't think selling them is gonna be a winning approach personally.
It's very interesting to talk about a balance between the technology development with the rent or sales cycle there. I've certainly heard that it depends a little bit on the customer. For example, FedEx is not scared of CapEx, but you have to understand your customer there. I really hope that you're all okay with going a few minutes over time. There's a lot of questions that we're just kind of skirting, and I'd love to get some final thoughts from each of our speakers. We were heading into the territory of saying, well, what are the targets that are potentially available for manipulation? And I'm just wondering if anybody would like to address the opportunities for manipulation in robotics that are upcoming.
I think the place we've seen it applied, so the highest amount is in pick and pack, so in automated logistics, really putting goods into boxes or into totes, and totes move around, so sorting. We've seen the most number of companies focused on that particular part of that particular job, and that is a high manipulation job. I would say the adoption's been slower than I would have wanted in that space. There are a bunch of companies who have, they can solve the problem, but mostly they're living in pilot hell, where they sell one or two to UPS or to FedEx or to Macy's, or probably not to Macy's, but to some e-commerce retailer in their fulfillment operation, or to a 3PL. But very few will sell 500 to this particular customer. So still a lot of in the trial phase. Maybe that's changed a little bit during COVID, where you've had huge increase in demand. But that's the place I've seen manipulation applied the most.
Thank you very much, David. Those are really great points. And I think that the pilot hell is something that Deborah and I were chatting about in a sense, as to, what is the role that, say, for example, retailers' own innovation R&D labs play? Is that the route to adoption through retail, perhaps? But that would be opening up many more topics of conversation. And we've run out of time. I'm looking forward, hopefully, to getting you together again in the future for another retail robotics discussion. Do you have parting thoughts for a bunch of roboticists who are looking at potentially their next steps right now?
I would say, again, I'm not a VC type person, but just be really nimble. And really be a student of what's going on, because the market is evolving so rapidly. And I think there's a lot of opportunities around robots that involve robots. We kind of mentioned a few of our research focuses, around the software, around communicating with bots. A big part of this, as I mentioned, the bot, the camera, the IoT device, all communicating and working together. I mean, I don't see people doing that. I do see the need for it and a massive opportunity in play there. So, I mean, the bot space is, I wouldn't say it's crowded, but there's plenty. I mean, there's enough competition right now, for the most part, shelf order bots, spill hazard detection, et cetera, et cetera. I think that the backroom automation, and Deb alluded to a couple of those companies, that kind of stuff is super hot right now. But I would think about the opportunities in the robot market, not necessarily from a hardware perspective.
Find a mentor, and find someone who's, if you want to look at retail, find somebody who knows retail. You can bounce ideas off of them. They can also direct you to there's a lot of nuances in robotics, right? Those who might be interested in exactly what you're working on, and also anyone who might work on a POC with you. So I do think this idea of mentorship is absolutely critical. And, I'm talking to the choir, preaching to the choir in terms like MVP, right? Just get something out there. It doesn't have to be pretty. But also when it comes to selling into retail, I think making sure you're filling, kind of a need or something, even as simple as it sounds, like listening to earnings calls, right? If you can pick up that they've said something, right, you can go back to them and say, hey, I heard you say that, we have this solution for you. And it will help the retailer, the brand, feel that the company, which I do think with, as everyone on this call knows, retail is very much about relationships. And so, I'm happy to help. Steven's happy to help, David, Andra, but, ping one of us, we're always happy to give a half an hour, kind of to assist and move things forward, because we care very much about this topic. And I'll hand it over to David.
Thank you. David?
I would say those are all great pieces of advice. I agree with those. I would also just add that whether you're selling into retail or any other sector, you need to be solving a problem that the CEO once solved, not like the global head of innovation once solved, right? You want it to be an acute problem that your customer is willing to spend to solve, as opposed to try it in a little innovation playground and sort of make pronouncements that they've got one robot doing something. If it's a real problem that the customer wants solved, then it's going to rise up to the senior executive level. And so as you're doing your diligence on a possible problem that you're solving, the higher up in an org you can get to find out how acute the real problem is. Just as a very small example, in retail, or in grocery in particular, I spoke to about 12 CEOs of grocers before I made the Simbi investment. And I heard from 9 of them that their number one problem was out of stocks. They were completely focused on solving the out of stock problem. So it didn't mean they were going to buy a robot to solve it, but they needed to solve that problem. That made me feel like we had a better shot.
That's very insightful. Thank you very much. And, I picked up so much from today's call, and I'm really looking forward to exploring more about this great opportunity that there is for robotics at the moment, both during the COVID period and post-COVID period. So I'm looking forward to what the future will bring. And many, many thanks to David, to Deborah, and to Stephen for a fantastic discussion. Thank you all.
Andra, thanks for having us.
Andra, thank you. We really appreciate it.